Good morning, everybody. Hey, sorry I missed you yesterday. Taking a little bit of downtime. We'll be here the rest of the week, though. I want to thank you for joining us this morning, the Morning with Dave. He'll be here momentarily. You know, folks, in retirement, there is no next time. There's no do-overs, but there's plenty of obstacles that we have that can make retirement kind of difficult. There's right now low interest rates and ever-changing healthcare landscape, rising healthcare costs, volatility in the stock market, changing tax laws. All these things are obstacles, and we've prepared for those obstacles. You need to prepare for those obstacles in retirement. We've put together a completely complimentary guide with 5 retirement planning issues that you need to consider as you get ready to retire. To get your complimentary copy, all you have to do is text the word retirement to 863 285-3815. That's right. All you have to do to get this complimentary report on 5 different topics that you need to consider as you head into retirement is to text the word retirement to 863-285-3815. That's text the word retirement to 863-285-3815. Hey, hang tight. Dave will be with us in just a moment.
YFM, it's 8:38 here. We're at 22 now before 9. Time checking on your money, find out how Wall Street's doing and what's happening to your IRA and 401k. Yes, all the world's markets are actually open today after one of those weird days yesterday because Europe was shut down for Easter Monday, and that made it relatively quiet. He's back after playing Continental yesterday. Phillip Statler is here from the offices of Statler Financial Services in downtown Sebring. Phillip, good morning and welcome back.
Good morning, Dave. Hey, glad to be back. Hey, had a little downtime. Got to go to Tennessee, visit daughter and son-in-law. So, other than Friday having some pretty crappy weather, it was a great visit.
I'm really glad to hear that. Yeah, I told everybody that you were just being continental yesterday because the European markets were closed. You were going to do it too.
Hey, yeah, the office was open. I just happened to be gone.
And I did say that. I was a good boy. The office there, they could call 382-0037 and get an appointment later with Phillip. Anyway, we had a really slow day yesterday as far as earnings reports because when you do a good job, you want everybody and their brother to be able to trade you. And Europe shut down. European traders weren't doing anything, so it was a little bit on the quiet side. No great macro news to report yesterday, but the same thing that we were talking about yesterday morning is affecting things this morning, and that's President Trump's saber rattling about if you don't want to help us and stop buying Iranian oil, we're going to slap sanctions on you. And boy, is that bringing the price of oil up around the world, and that's going to mess with a bunch of transportation issues going forward, I assume.
I believe you're probably right there. I think that the low price of crude oil is probably gone, at least for a little while, as we take that supply out of our marketplace anyway. Yeah, we're up over 65. I think we'll probably bounce somewhere between 65 and 70.
Yeah, can you imagine? It was only about a year ago we were worried about falling below 40 and putting our domestic oil fields out of business, and now we're sitting there at 65 plus a barrel going, geez, when's it going to stop?
Yeah, and we've got, gold and silver heading the opposite direction as oil. They're heading down.
Oh, yeah. Well, a lot of that tends to be a little bit because it looks like we've got a few companies that are doing well, and that's openings up for investors in the equities field. Earnings season is in full bore, and one of the ones that caught my eye that reported this morning early on was everybody's favorite cell phone provider, Verizon, had a pretty big beat, didn't they?
Oh, they did. They beat by 3 cents a share. Revenue, though, was a little bit below the forecast. Now, they did boost their full-year guidance, and so I'm sure that's giving them a little bit of a boost this morning. I'm trying to get my
I was going to say, I don't see them on my big winner and loser list. I know they're trading up this morning. The thing that hit me is kind of interesting, and this is, boy, a picture, a sign of the times. The one part of Verizon's portfolio of products that was off was their, what they call wireline communication services. In other words, old-fashioned telephones. That's where they got their start, and that's tanking. But everything else, their Fios, fiber optic cable firm is doing well. Their cell phone firm is doing well. They got a couple of new exclusives to announce on the cellular side of the business. And, well, the phone companies are getting out of the telephone business, aren't they?
Well, they're getting out of the hard line business. However, they are trading down right now, Dave. You may have a delayed quote, but Verizon is trading down this morning about 1/3% before the market opens up, and they're kind of getting up close to their 52-week high. Their 52-week high was 61.58, and they're right now going to open at 58.15. So they were up yesterday, and they're not giving back all of their gain they got yesterday, but they are going to open to the downside, it looks like, this morning.
Sounds to me like somebody read the report a little bit more detailed. The original news ticker said that the price spiked up right after the report, but then went down again. Okay.
Yeah, and that happens, sometimes when they originally hear the news, they'll do one thing, and then as they decipher the real news, they things change.
Yep, and that might be that thing, looking at that wireline industry, because there's so much capital involved in that. Nobody wants to see that end of their business go down just because it may be antique, but at the same time, there's a lot of capital there. Other than glamour stocks out, I know you saw Twitter, and I didn't see the results on that.
Yeah, Twitter came in. They really blew it out of the water. They came in at 37 cents a share, well above the estimate of 15 cents a share. So, more than double what was expected of them. Their revenue also beat forecast. So they've been able to monetize their daily users, which is kind of a new metric for them. And they brought on new people using them. They've exceeded their analyst forecast across the board. They're getting a nice bump. They're up a little over 7% this morning.
And they're sending a thank you card to President Trump, right?
Oh yeah, well, he likes to get his fair share out of them anyway.
Nothing like having a presidential ad for your service coming out every doggone morning that everybody in the news media wants to read. The big surprise I saw was, because I was looking at it yesterday, it wasn't newsworthy, but I noticed that Mattel traded downward in my pre-market trading yesterday. I knew Hasbro was due to report today, and I was kind of figuring, oh my gosh, there's a sector problem with toys, but boy, was I wrong. Hasbro was on the top of my big winner list this morning.
Yeah, they really had a good quarter. They beat by 10 cents a share. They were expected to come in at 11 cents. They came in at 21 cents. So that was a pretty big beat for them. Revenue was well above expectations. And they've done a good job of cutting costs, which has helped in their profit margins, which is always a good thing when you can, kind of increase those profit margins going forward. See if I can find. They're up, and they're got to be on your big winners list. They're up 15.75% this morning.
Yeah, they're on the top of my big winners list at the moment. I'm delayed. They were at 16 1/3 up about 25 minutes ago, but still phenomenally up this morning. Other household names. I know we got a big beverage distributor out with that.
We do. We had Coca-Cola come out. Coca-Cola reported they beat by 2 cents a share. Revenue also came in above forecast, which was a good thing. They've been able to benefit from improved water sales, and they've come out that new soft drink, right? Was it the vanilla orange soft drink that they kind of launched during the Final Four?
Honestly, I've lost track of all the variations they put out these days.
I know, but they say that's really helped them with increasing their sales, and so they're up 2.75% this morning, and they're getting pretty close to their 52-week high. It was 52-week high was $50.84 or $48.70 right now. So some good things there at Coca-Cola.
Well, we got stuff coming up. Rose is another one that's kind of interesting because it's not hit. They're not catching a cold from Boeing. Lockheed Martin actually had a good report, didn't they?
Yeah, they did. A very good report. They came in at $5.99 a share for the first quarter. They were expected by the analysts to come in at $4.34 a share. Revenue was above what the forecast was, and they raised their full year guidance, which is they always like to see that when they start raising their guidance. That's kind of a good thing there.
I wonder if they're seeing cancellations from Boeing starting to come their way.
You know, I didn't see anything in the report for that. They're trading up a little over 5% this morning.
Yeah, they're looking pretty good. I know it sounds like everything's coming up roses. Got any other good news reports before we get to the one bad one for the day?
Well, I do. I've got Whirlpool and Procter and Gamble all reported today, and we're all pretty good signs. Let's start with Whirlpool. Whirlpool came in at $3.11 a share. They were expected to come in at 2.86. Revenue, though, was a little bit below what was expected. They have expected to lower their costs from tariffs and raw materials this year. So they've got some, at least looks like maybe some good things in the pipeline. As we look at Whirlpool, they're trading up 5% this morning. So good news there. We looked at Procter and Gamble. They came in 3 cents above estimates. Revenue was above forecast, and their organic sales were better than expected. So I'm not sure what's got them trading to the downside, though. I didn't see anything in the report, but they're trading down 1.9% this morning, Dave.
Might just be a function of too much else that's been inviting to buy at the moment, because it sounds like we got a lot of good news out there. You mentioned before we went on the air that you had some information on Harley Davidson as well, didn't you?
I do. Harley Davidson came in before we get to the loser of the day. They came in. Let's see if I can get to it real quick.
While you were doing that, I noticed on my news ticker came up that Harley Davidson stock is spiking because President Trump mentioned them in a tweet again. Add on the strong shipments, they ended up benefiting two fronts. Number one, from our favorite tweeter, and number two, off of a fairly strong earnings report.
I thought maybe you were going to say that President Trump had started riding Harley Davidsons, but
he could. It wouldn't surprise me any, really.
So they beat by about 15 to 20 cents a share. It came in at 80 cents a share, expected at 65. Revenue also beat forecast. Their U.S. market share increased, which has got to be a good thing for them as we look. And they're trading up almost 1% this morning.
Wowzers. And then there's a fly in every ointment, and we had one in the paint business, I gather.
We did. Sherwin-Williams kind of had a little bit of a miss as we look at their numbers. They came in at $3.60 a share. They're expected to come in at 3.66 a share. Revenue missed, and if we look at year-over-year revenue, or net income rather, net income was off by $5 million from same time a year ago. So they've kind of missed across the board, and they are trading down a little over 2.5% this morning.
Actually, when you think about it, that's one miss, and really the EPS miss wasn't all that terrible, was it?
No, it really wasn't that terrible. But when I was looking at it, there's some little things when you compare year over year that's got people a little concerned.
You know, and I noticed on the reports that I had yesterday when you were out of town, it seems to be a common trend. The absolute numbers year over year, by and large, especially the consumer goods companies, they are a little lower this year than they were last year. And that's starting to look like a picture you can actually fill in some color in the lines, doesn't it?
It does. And I talked about that a little bit last week, how just because a company beats analyst expectations is that analyst expectations have been downtrodden a little bit. They've come in lower than same time last year. Yeah, they beat, but they beat a lower target. And so expectations are not as high as they were last year. And so, I think a lot of times we're saying, yeah, they beat, which is a good thing. Don't get me wrong. But if you look at year over year, maybe they're not in as good a shape as we think they are.
Understood. And that kind of explains the fact that after we do beat, it sounds like party time should be happening on Wall Street. And yeah, green ink is happening, but it's kind of a muted response given how pleasant the earnings reports look today, don't they?
Yeah, it really is, and justifiably so because, because of, I think, this muted, I don't know, muted expectation that, hey, we're going to come in above analyst expectations, but that expectation has been lowered. The bar's been lowered, so we don't have to do as much to meet it.
Yeah, it's kind of doing what you say you're going to do, even though it may not thrill the crud out of your investors. 45 minutes before we open, Phillip, we kind of teased it. Little bit of green, and that's good news. How green is it this morning, 45 minutes early?
Hey, we're looking good, considering we came off of a kind of a mixed day yesterday. We've come out and now we're sitting at, I'm sorry, I just lost my screen. There we go. At the Dow's up $57. The S&P 500 is up $2. The Nasdaq's up $6. I got to tell you, Nasdaq, that's a pretty big drop. When you and I first went on the radio, they were up 17. So so that's a pretty big retrenchment there on the Nasdaq. We've got gold and silver both trading down. Gold's down about 0.6% to $1,270 an ounce, and silver's down 1.3%, down to $14.77 an ounce. And then your favorite thing, that black crude oil is up 2.5% to $65.66 a barrel.
And that is a big increase from yesterday, over 65 a barrel. International markets mixed, both Asia and Europe this morning going into the beginning of our trading day. Phillip, how do I get a hold of you if I want to fix my portfolio? A lot of us need it.
Hey, Dave, then give us a call at 382-0037. Check out our website at statlerfinancial.com. Follow us on Facebook, Statler Financial Services. Like our page there and keep up with us. And then, hey, before I tell you about the radio show, don't forget, this Friday, 10 to 2, is our 8th annual Shred Day, where we will shred your documents up to 5 boxes behind our offices. 10 to 2, we'll have hot dogs, beverages, and so don't forget to come by and join us for that. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
Absolutely. And by the way, I've been getting phone calls ever since the ads hit the air over this weekend about Shredder Day, so expect a crowd, all right?
All right, man. We're looking forward to it.
Thank you very much, sir. We will catch you tomorrow, and welcome back, Phillip.
All right. Thanks, Dave. I appreciate it, buddy. Hey, I want to thank you again for joining us today. Don't forget our Shred Day coming up this Friday, 10 to 2. That's April 26th, because I know this thing gets shredded out there down on Facebook. So, hey, join us then. And then don't forget our free report on the 5 things you need to be prepared for in retirement. All you have to do is text the word retirement to 863-285-3815. That's right. Text the word retirement, 285-3815. Thanks, guys. Have a great day. I look forward to seeing you tomorrow.